I was on mute. Good evening, everyone. Welcome back to the channel. I'm going to try something different today. I'm having a little trouble with the screen share, but I'm going to test something out here, and we'll know real quick whether or not this works. So let me do a share here. And something's changed with my settings here in my internet browser because I'm not able to share my entire screen anymore. But let me see if I share this window. Let me see if I'm able to go here. I don't think this is going to work, but it's worth a try. So let's see. I'm trying to pull up Thinkorswim by TD Ameritrade. And let's see, let me look at another screen here. No, it's all black. Darn it. Okay then, so I'm just gonna have to go to Yahoo Finance and I'll just look over my TD Ameritrade screen and tell you all what the result is. Unreal. I tried to sign into the web version of Thinkorswim, but it's not as good. So let me just go to Yahoo Finance. I'm going to go over two of my best option plays. And I don't know if I should keep doing this or not because I'm giving a lot of like free tips, even though this isn't advice. And I feel like a lot of you in my audience are doing really well following what I'm talking about. So just remember, there's such a thing called a super chat feature. If any of you all ever want to, you decide you feel generous and want to share some of this wealth you're accumulating, keep in mind there's that super chat feature. And you can super chat any amount. Because a lot of what I talk about, I'm not even doing myself because I don't have money moved into certain places to do these things very timely. So, but anyway, all right, we're going to have to piecemeal this today, unfortunately, because something with my Google Chrome settings is wacky. So what I'm going to do, I'm going to share Yahoo Finance, and I will just look at, I'll pull up the stock, and I'll tell you, I'll do the search in TD Ameritrade's Thinkorswim, and I'll tell you what it would have done. So Danaher, this is a good one. This has been my best option win ever. We're going to look at two trade scenarios. And I have a feeling, because I'm talking about options instead of dividends, that this is not going to do as well today. But I will point out, Danaher does pay a dividend. So keep that in mind. And I have two live viewers, so start commenting away whatever questions or concerns or feedback you have. So Danaher was up $4.44 today. Good number, 3 4s. It's up in the after hours tomorrow. And what I'm going to go over is two specific scenarios that happened within the last 2 years. One being this one right here. And I talked about this a little bit during my live stream yesterday or last week, one of them. Can't remember which one it was. But if you had bought 10 call options in Danaher between April 2021 and you held them all the way to September, if you got 10 contracts, you would have made a fortune because this stock went from $256 a share to $324. So when the stock goes up $70 a share and you're controlling 10 contracts of it, pretty easy math, right? One contract controls 100 shares, so 100 times 10, it's 1,000 times 70. What's your gain? Anyone in the audience? Let's see if someone comments before I give out the answer. What's pretty easy. If you have 10 contracts, each contract controls 100 shares. 100 times 10 is 1,000. The stock went up $70. So 70 times 1,000 is what? 70,000. You're right. So $70,000 gain in this example because the stock moved up $70. Now, does this happen every day? No. But in this particular stock, this has happened enough that there's a lot of potential to replicate something like this. And with that, I just lost one of you. So obviously one of you is not thrilled about the potential of making $70 in 3 months, which is kind of crazy. But to each their own, you know. So 10 contracts times 100 shares, like I said, 1,000 times 70. So that means, and this is kind of hard to believe, but if the stock had moved up like 150, if the stock had doubled, that would be $150,000. I mean, you don't even need to work at that rate if you can time this right. But what will happen, almost assuredly, if you do something like this, you hit this big of a home run, or in this case, this would be like a grand slam. You would be trying to replicate this all the time, and you probably lose as much money as you gained. So if you have a win like this strategy is not necessarily a replicable one repeatedly. This is going to work sometimes, but a lot of times it's not going to. But anyway, so I went over that one without going into the think or swim back test. But if you were going to back test this in think or swim, what you would do, you would search Danaher, and you would go to the Analyze tab in the app, not the web app, but the separate app that you download. You would go into the web app, and then you would search. It's called Think Back. For those of you that want to try this on your own. Unfortunately, I can't show it until I figure something out here. Where is, oh, here it is. On the Analyze tab, Think Back. So what you would do to prove what I'm saying here, as soon as this thing comes up here, I'm looking at it, but none of you all can see it because you can't see my screen with the Think or Swim, unfortunately. So I'm going to type in DHR for Danaher. Do this. Come on. Danaher. Moving a little slow today. This MacBook's starting to drive me crazy. So I'm going to go back to, we're going to travel back in time. Time travel to 2 years ago. Wasn't the market great back then? So we're going to go to, we'll say, do April 20th, 2021. And we're going to pick December expiring call option at, let's see here, we got to expand the number of strike prices. We're going to pick, I'm going to pick more than that. I'm going to pick 300. I think the trade example, it was 300, if I remember correctly. Okay, so we're going to pick a $300 strike price, 10 contracts of Danaher. And the profit and loss date is going to be September 10th. Let's see here, September 10th. That's only 32,000. I say that like only 32,000, but I'm sure we'd all take that. But what that means, this wasn't the exact example here. Let me go out a little bit. Let me go to April 30th and see how that did. Come on, think or swim. 31,000. That might not have been the trade. Let's see. So let me do, instead of December, let me pick, I should have this memorized. Well, I will after this. And so for those of you following, which I think there aren't many of you, because I'm not talking about dividends, but I've got the Yahoo screen for the, I've got 5 of you. Good. So comment away. And remember that super chat feature does exist. So yeah, I'm sharing my Yahoo screen, but I'm on the back end. I'm looking at Think or Swim, Think Back, and I'm telling you all how to do this on your own to backtest. There's an Amazon call option that you would have made. It's like a $500,000 trade scenario. You do something like that, you walk away from the game a winner, and you never need to play the game again, more than likely. I mean, I'd be happy if I had $500,000. I could just invest it in the dividend portfolio that we talk about and be done. One grand slam like that, and I'd be good to go. So anyway, okay, forget the December 17th one. This is December 17th, 2021. I believe it was actually September 17th expiration. So I'm going to go out to here and then $300 strike. So that was 290. Profit and loss date is going to be, say September 3rd. Dang, that's the same. I don't know, which one was it then? All right, let's try the 620. 620. Bought it on 420. And then sold it right before expiration. Okay, it might have been the 271. So the difference between the 270 strike and the $300 strike is only about $26,000. That's the key about picking the right strike prices, because you think that the further out of the money you're going, the cheaper it is. So you're thinking like, oh, cheap, buy cheap, but you could have just shortchanged yourself of $26,000. So now that I've said that, let me go lower. Let's go 250 and see what that was. And see, I'll be the first to tell you, I'm no expert on picking uh, like the correct strikes. I go as far out of the money as I can because I think, and this is false. This is a wrong way of thinking, but I'm thinking cheap. There's the one. It was the $250 strike price Danaher call option. Buying it April 20th or 420 for those of you that resonates with. Um, yeah, so it was that one because that had the lowest theta actually of these three. It was a $70,000 profit. And you know what? I should know that because I gave that. I said in the beginning of this, the stock went up to what? What did I say? I've already forgotten. So in 2021, the stock, and it's come back down since then. But in this example, by September 10th, you know what? Let me see if we held it until September 10th. Let's just look how much of a difference that made. Holding it another week would have cost some. It would have cost us a little bit. How about if we held it till the 8th? Yeah, we would have had to sell it like right on the 3rd of that year. So by September 2nd, we were up to $331. The stock was, let's see, the stock shot up $90 from June 7th to September 2nd. So the stock was at 240. So you know what? Instead of that April 20th example, let's say we bought this in June instead of 420. Let's just say we bought this like June 10th. June 10th. June 10th. We're going to change all three of these, which you can't see, but just know that there's three of them. We're going to change this to June 10th. Okay, so 71,000. So buying it 2 months later would have got you a $71,000 gain. So, you know, we're not going to time things perfectly, but anyway, the stock has come down since then because the stock moved up. And the point I was making the other day when I was talking about this one, let's see how we're doing. All right, got 3 comments here. Let's see. So William says, do you think the market will crash more like another 20%? Or do you think it will flatten out or it will continue to rise, fall, rise and fall? Well, that's where we've been for the last like 15 months or so. I'd like to say that I don't see it dropping another 20%. Keep in mind, we have an election coming up next year. I seriously doubt that the market will be down in an election year. I could be wrong, but I doubt it. I tend to doubt it, let me just say. So I think that once the Fed pivots and starts cutting rates, the market's going to start to go up. In fact, we've already somewhat seen a little bit of a bear market rally. Like January was a great month, but February and March, like February was rough. March was a little bit better. In fact, I think March we were actually up. But you know, I've kind of just not been following as much here, not as close as I normally do. If I was like a full-time trader, of course, I'd be all over this. But let me see. So yeah, January was a great month. March, let's see. Okay, I'm gonna look real quick here. March 1st to March 31st, we were up in the S&P. That's what I thought. We were up about 4% in the S&P. March 1st, we were up in the NASDAQ 7.4%. The Dow, everyone's favorite, or not. I don't know why. Let's see. How were we in the Dow? Who cares about the Dow anymore, right? But we were up 1.87%. Let's see. I'm going to get to these comments here. I got a lot of them. But my hunch on the market, I think before it drops another 20%, it's going to rebound. But we could keep doing that yo-yo thing up and down. Anyway, so address that one. Let's go. I agree. Okay, Mr. Robert Smith. Oh, you showed up live. All right. Depends on the Fed, inflation. Oh, good. I like to see you guys are kind of interacting with each other here. That's good. So it depends on the Fed. Inflation is coming down, so they may raise another 25 basis points, but maybe next time 0. No cuts this year, but market will likely flat with no rate hikes. These are very low dividends. Yeah, this isn't a dividend video today, even though they do pay dividends. This is more of an options video. I'm trying something a little bit different because there's some interest in options. So when you see the example I'm going to go over, the one I actually did, the 650% gain, uh, I didn't hit the $70,000 one. And you know what? That may have been a good thing, because if I had hit that, I might have retired like 2 years ago. What would have I can tell you what would have happened to me. If I hit that one, I would have started trying to do this all the time, and I would have probably lost more money. Like I said earlier, if you hit something like that, you're going to get addicted, and you're going to keep trying it over and over again. And like I'm saying, it's not a long-term strategy. It's something that'll work for you here and there. But if you can hit them, save the money and then put it into like a dividend fund. That's what I would do. So, but I would have to disagree on this a little bit. I think the Fed may start cutting by the end of the year, depending on how things go. The job market hasn't really started to sputter too much yet, but I do think that by the end of the year, they may start cutting. So, with that, got a lot of backlog of comments here. So, let's see what's the next one here. Um, think any good stock or ETF you buy over these months should do well if you hold for a few years. Yes, election years are always up. That's why it's like, buy now, get in cheap, relatively speaking. I just wish we saw the inflation in the stock market like we see in everything else, right? I mean, you got some goods like bacon and stuff like that up 70%. I want my stocks to be up 70%. If costs are going to go up 70%, I want my freaking stocks up 70% at least. Okay. William says, if you had $100,000, would you put it all in TSLY or in multiple high yield stocks? At this point, given what I think Tesla is going to do, and this isn't advice, because what I would do differs from what you would do, because my situation is probably different than yours, or not, who knows. But I would probably put it all into the TSLY. Now, if that was all I had to my name, I don't know. I'm kind of a risk taker, though. I'm bullish on Tesla. And I tell you what, from my standpoint, I've seen too many influencers that are my age or younger that went all into Tesla, and they're very wealthy now. And I think I could have just as easily done that back in the day, but I didn't, because of fear, because I was afraid of how Tesla. I'll never forget, I was looking back in 2017, like when I was in finance class back then, I was looking at Tesla and I was thinking about it. Like I had my finger on the trigger, but I was like, and you're going to laugh when you hear this, the stock back then was fluctuating from like $40 a share to $200 a share. So the more conservative version of me, slightly younger version of me, I said, I don't know, like fluctuating between 40 and 200, that's a big fluctuation. So I never took the chance on Tesla. Had I done that when it went to like 1,000, I could be like any of these other influencers on here with huge channels. But it didn't happen. But I don't want to miss out on it this time. So, and then I think Paul Varden here, you were responding to William. Yeah, that's a good question. Do you care if you lose it all? Because that makes a big difference. If you don't mind losing it all, you can invest in pretty much anything. So let's see here. And I like that you all are kind of responding to each other on here, but I'll just read the comments as I go since I saw them. So you said, I'm asking because I'm afraid to invest a huge amount in just one fund, especially because TSLY is new. Can yield max delist and time like a rug pull? I don't know. I don't think so. I think it's too new. I really do. Like some of these, like SVOL is relatively new. I haven't seen any real red flags with them, but some might disagree. Yeah, it could definitely be a YOLO. So, and then let's see, what did you say here? I put almost 100,000 in TSLY, 6,007 shares. Options I don't understand. Well, they're pretty easy, and hopefully this video will help you understand options. This is kind of like a little bit of a crash course, because really, if you can just do a call option, you're just scratching the surface on all the option strategies. And trust me, I don't even know all there is to know about option strategies. In fact, I have a cheat sheet up here that I dug up that I actually put up here. I'll show it. There's so many different option strategies. This is my options cheat sheet here. It just kind of tells you, you have, I'll tell you the ones I know. So this list, let's see, 3, 6, 9, 12, 15, 18, 20. It lists 21 different strategies. The long call, I've done that one. Naked short put, I've done some puts. Covered calls, I've done. Bull call spread, I've done a couple of those. Bull put spread, I don't think I've done. A call back spread, I've never done. Long straddle, long strangle, reverse iron condor. Now I want to do an iron condor. I've definitely not done a reverse iron condor, but some of these, um, and then there's an iron butterfly, there's a short butterfly, short straddle, neutral, calendar spread, iron condor, short strangle. Let me just go over the iron condor real quick here. Um, Maximum gain for the iron condor strategy is equal to the net credit received when entering the trade. So what you can do, and this is advanced options here, you can do spread trades and make money off of the spread, but it's minimal income. And I'm in some different options groups that's like the bread and butter of what they talk about. And believe it or not, like my philosophy that I've acquired, I would say I've absorbed, like any student of multiple teachers, like I've absorbed knowledge from different schools of thought. I'm a big fan of the long calls and the earnings plays. Now, another options group that I'm in, they think completely different. They think it's risky and whatnot, and they've done really well trading options. And I can tell you, lots of people have made millions trading options. So when you hear about it, it's not a scam. It's not too good to be true. I just showed in the beginning of this video a $70,000 trade on 10 contracts of Danaher. So lots of money are made in options when you play things right. Now, a lot can be lost too. The good news, I guess, is that you're limited in your risk, your downside risk. You're limited to what you invested to begin with. So, like if you invested $2,000, say, in a call option, that's the maximum you can lose. Now, that's a lot to lose, but if you had the chance to make like 20,000 with it, I don't know, it might have been worth the risk. And I've had some dumb trades. Trust me, I've let them expire worthless, and I've gotten hit. I started doing covered calls because the way the market was going, I said, well, if I'm going to get screwed on the call options, I might as well just do covered calls and collect the premium. Well, I got screwed on that too because then the stock moved against me. So there's some that you literally make money whether the market goes up or down. It's like a bidirectional spread. So you buy a call and or you sell a call and you sell a put. It's one of these strategies on here. But anyway, see, I really am becoming a coach now. I got my playbook here with me now, my options playbook. Anyway, okay. Next comment here. Got a lot of them. I'm gonna get to them all. 15,000 most in TSLY. Well, yeah, like I say, everybody's situation is different. What works for you may not work for me. Hey, I would put 10,000 in TSLY right now. If I get 10,000 moved over to my brokerage, I'll probably do that. And you know, it's funny. I'm going into options here, but I'm losing live viewers. So what the heck? Aren't you all? Don't you all want to learn options? You can make way more money with options. I mean, I get it. Dividends. You know, we all kind of you know, we're infatuated with dividends. I was going to say something else, but we're infatuated with dividends. I get it, but options you can make a lot of money on. Okay, so let's see what's the next one. How much you make off 100,000 in test TSLY monthly? Well, I kind of did that example yesterday. Just shave off a zero basically, and then let's see. Uh, Robert, you're not scared yield max can fail or delist out of nowhere, lose all that dollars. Well, William, I'm not sure how familiar you are with the TSLY. For me, I just discovered it. Um, I don't know about delisting risk on this one. It's fairly new. I don't see Tesla going anywhere. So if you have anything that, any rationale behind your concerns there, feel free to voice them and I'll read the comment because I don't see any reason right now. But then again, I'm kind of just looking at it. I could be naive. Who knows? So anyway, and we got a LOL from Jose Guzman. Thanks for that. Um, and then how could it delist? People do options on the stock as well. I agree. I think the same way. And then I'm just saying it's scary investing a big amount of dollars in one fund. Well, sometimes you got to take a risk. Like if you had put everything into the S&P 500, keep in mind the S&P 500 is like an index of indexes. It's the 500 largest companies. And there's people afraid to do that, which I don't understand. Like I'm not going to be specific, but there are plenty of people out there that are afraid. They'd rather put their money in CDs instead of the S&P 500, which I think is totally stupid because the S&P 500 is not going anywhere. The 500 largest companies, if one or two or three or five companies fail, you have new ones added all the time. It's an index. That's the whole point of investing in the index, right? And the S&P 500 was averaging like 20% a year for the last 10 to 12 years, which is why I get so passionate when I hear people say that it's risky because by thinking that way, you just missed out on like average of 20% gains over 12 years, and your money sat in CDs. And you know what? You know what? I'll say it. That is the difference between rich and poor. That's why they say poverty is a mindset right there, because people that think that way and are stubborn that way, and they think, oh, I'd rather park my money in CDs and get 2% when inflation is 9% or 5%, or I don't care, whatever it is. CDs don't pay what inflation really is. Okay. So when you would rather do that instead of take a risk in the S&P 500, which I don't see as a risk because I mean, how long has it been around? Uh, it's stupid. That's what separates rich from poor. So that's my 2 cents for the day on that. Now, where are we? Okay, let's see here. Still got a backlog of comments here. You said that's why folks like SCHD and JEPI, uh, SCHD and JEPI yields are too low compared to the high yields. I agree. I mean, we're spoiled now with all the ones we found. Uh, like, I'm kind of like, I'm mad that I got into JEPQ earlier in the year because now that I found TSLY, I keep finding better and better ones. By the way, I need more of them to cover because I want to keep the series going. So add these to the comments, new ones that you want covered. I think the last one I got was OILK, and I was trying to search for other ones, but I can't remember. So anyway, uh, put 15K in and don't add any more. Or what you can do, like I do, you put 15,000 in something like, just take SVOL for example. See, good, we're back on dividends, right? SVOL. Okay, you put 15,000 in that. What is it, like 18%? So you make $2,700, and then guess what? New money. You just put that in something else. So you keep getting more money. The pie keeps getting bigger. All right, so now let's see. Also, I put a stop order. Lots of good comments tonight. I'm really liking this. I put a stop order on TSLY 1350 and SVOL. So worst case, I lose 5,000, but Tesla would have to get to like 120, which was caused by Musk buying Twitter. Yeah, but I think that's all done. I think you commented that too. That's all the fallout from Elon buying Twitter. I think that's kind of all. The dust has settled on that. Tesla's up like 70%. And by the way, from the video yesterday, we found out that Tesla and TSLY perform about the same. And that's what sold me on it, because if you take the dividend return, the compound dividend return, and the return of the fund, it's like 30% and 30%. You're just about where Tesla stock has performed for the year for 1/12 of the cost. So you can't beat that. So, but stop losses is definitely something I want to learn about. Stop losses with options, because I've gotten screwed not setting stop losses. Like, once, see, a, a call option, and we're going to get back to call options, the topic of the video. We're going to get back onto that in a bit. But you can get like a 20% loss quick. You know, if that thing moves, you can lose like 50% in a day, depending on which one you're in. So, okay, William says you will make that 5,000 back with the dividends. And I know you all are responding to each other. I just like to put the comments up. So let's see. Options are scary. I tried it, lost 1,000. Maybe I'm dumb to understand. Hey, honestly, losing $1,000 in options is not that bad. Um, I've done worse than that in the learning experience, but I've also gained my best trade. I made 7,000 in one trade on options, but that doesn't happen every day. Um, if that happened every day, I'd be doing this full time. But I've had some dumb ones that I've lost. So yeah, options can be like playing with fire. But you know, you can get to the point where you have a strategy going, and you can make a lot of money if you really know what you're doing. It can be done. So let's see. When you talk dividends, please keep the zeros. I agree. That's why I keep the bigger example. I like big numbers. I like really big numbers. That's why I wrote myself a check for $10 million, even though I can't cash that right now. It's visualization, right? I like a lot of zeros at the end. That's why I pick $1 million. So that's why other people on here trying to get me to do 10,000 or 100,000, and I get it. That may be your current reality, but think big. You know, all realities are possible eventually, right? So let's see here. Yes, they are very close. 6,007 shares will give me 48.66 a month. Wow, you're rolling. I mean, you're talking about losing 5,000 earlier. I don't think, if you lost 5,000, I don't think that would be like of any consequence to you. You seem like you're rolling, so good for you. All right, so the comments have paused for a second here. So now we can get back into our options. Oh, I had one more come in. A few months I'm in the green. TSLY is getting really popular. OARK is on my watch list. Oh yeah, did I cover that one? The inverse Kathy Wood fund? I think I did. Yeah, we're still waiting for Kathy Wood's fund to recover, right? I don't know if it ever will. The days of 2021 seem like they're over. But anyway, if all else fails, just write yourself a check for $10 million. Just remember that. Anyway, it's a little joke there. So yeah, TSLY. I'm just wondering, do we think TSLY is really going to take off here soon? Because I want to get in the next week or so. Yeah, I did. See, good memory. I did cover OARK. What I'll start doing, I'll do different ones and kind of do the compare different ones. Just keep it going. Anyway, so back to options. All right. So Danaher. So that was example number one. I only went over example number one, and I'm going to probably show three different examples. I'll show the real one that I did in November. And so this video may go an hour today because I'm into it now. I'm having fun. So I'm getting a lot of comments. So good deal. All right. So Danaher. So scenario number two. So if you missed out on the $70,000 profit, which most of us did, not to worry. You're going to notice this stock behaves this way quite a bit. And around the same quarter, actually, so we're in April. Like I mentioned on another video, it may be time. Maybe time for another Danaher option. I'm seeing the signs here actually. If you look here on the screen, the 1 year target estimate, $300. What are we at right now? 254. It's up 444. It's a good number, by the way. So if you remember the example I went over from 2021, the stock was around 250. It went up $75 a share. So 10 contracts in that when this thing moves up. If this thing were to do that again, if it were to just go to 300, that'd be a $45 per share gain. You get the right strike price, you get the right in the money, out of money balance. That could be a $45,000 gain on 10 shares. So something to think about there. I better make sure I do that because I'm going to be really mad if I come back to this video and I didn't take my own, well, I'm not going to call it advice, but believe it or not, you all would be surprised. Half the time, I don't even take my own advice. So it's just timing. You got to have money kind of sitting around. But anyway, so this one could be setting up because I said around April, maybe even into May. You got about maybe 2 or 3 weeks to make this. And look here, earnings at the bottom. They've beat earnings the last 4 quarters. Now, for whatever reason, the threshold is incredibly low for quarter 1, 2023. Ooh, and they're reporting April 25th. So you got to make this trade soon if you're going to do it. I got to remember this too. So the threshold is really low. One of you already said you got into it. So that's good for you. But yeah, we've got in the next 10 days, the earnings are coming. So it could be an earnings blast scenario, but for this scenario to set up again, you'd hold this for maybe 2 or 3 months. Maybe, like I said, from like May to September was how this example worked out. So now what you'll see here, the same scenario that happened in 2021 also happened in 2022, which 2022, as we all well know, happened to be a very volatile year for the markets. So June 2022, the stock was down to 238. And what did it do? By August, 297. So that's almost a $60 gain. So with the 10 contracts, that would have been a $60,000 gain. If you take the delta, the theta, and all that, you pick the right balance, right? So that would have been a $60,000 gain. In fact, I'll go into Thinkorswim, which unfortunately we can't see, and back test that one too. So let's see. I'll X out one of these, or I'll just pick a leap option. That would have done well too. Leap options are great too, which LEAP stands for long-term equity anticipation. And what that means, all that is, think of leaping. You're buying further out. So if you're worried about option performance, the further out you buy, the further out from the expiration, you can actually do a lot better. You can buy yourself time. You may have 8 earnings reports instead of 4 or 2. So that's the idea there. So now what I want to do, going to go further. We're going to go into the 2022 one that we were just talking about. So let's see. Let's see, we'll pick May 20th, and then let's see, we'll pick a September expiration. This trade may work every year. I mean, I'll have to go back and look for sure. I'll go back to like 2020. Well, 2020 was the start of the pandemic, so that's kind of skewed. But I may go back every year and see if this exact trade works in the second quarter of every year, because it just might. So I'm going to pick, let's see, September 16th expiration at 250 strike price. And why is it not coming up? It says NA. Let me go out to 2022, September 2nd. Let's do this one. Okay. So I'm in Thinkorswim, kind of fiddling around here, and I'm looking to see why the strike prices aren't populating. Strange. Okay. Trade date, profit and loss date. Oh, here we go. Okay. September 9th. Oh, come on. Let me go to May 25th. $21,950 profit on that one. Now, if we had gone further out of the money, like 240, let's see if this populates here. Why is it not populating? Oh, profit and loss date keeps reverting. I wish I could get this showing on the screen here. Okay, September 9th. $26,450. So very similar trade, not as good a profit, but still, I think we would all take $26,000. So that one, let's see, where's my screen here? That was example number 2 on the Danaher. And let's see here. Ooh, a lot more comments here. I'm liking this today. Let's see. Oh, TLTW and HYGW. Ooh, there's one I don't think I covered. I'll have to write that one down. Had big dividends this month. Do you think in a couple of years the funds will go down in dollars because the Fed will cut rates? Absolutely. TLTW is a bond fund. So I normally don't touch bonds. In fact, my brain kind of shuts off when it comes to bonds. Now, I did get into, there's an app called Yada, and they had a way to get into the I-Series bonds when they were paying 9%. Well, unfortunately, when I got in, I got 1 month of the 9%, and then they cut down to 6.89%. So I'm not reaping the full 9% anymore, because that's what usually happens. I decide, all right, I don't really like bonds, but they're paying good now. Let me go get in, and then they cut the rate when I get in. So absolutely, I think these were a good play while the rates were increasing, but things change really quick. That's what you got to remember. Things change very quick in investing. And then let's see. I want to buy Tesla. Ooh, it's 12 a.m. on the East Coast. I want to buy TSLY before Tesla earnings. I bet it will go up when they report. I think earnings are coming up soon. That's another one I got to remember. God, so much to remember. I got to remember Danaher, TSLY, and I got to move money to buy these. Such first world problems, right? Well, I'm not as rich as some of you on here, but the more my channel grows, that might change. Let's see. And I might have some help on the channel coming up soon. We'll see how that goes. Might have some rebranding, a new name and whatnot. We'll see though. Okay, earnings for Tesla. I think I just said this yesterday. Earnings for Tesla. April 19th. That's like 5 days away. Better get in quick. Stock was up today, and TSLY is actually going up, I think, in anticipation of earnings. It's gone up like, let's see, it bottomed out at like 1471 on the 12th. Darn it. Should have gotten in then. I gotta close a bank account and move money. I may just go there in person. That way I get the check and deposit it immediately, so I don't take 5 days to move. Anyway, let's see now. I think TLTW and HYGW division will go down over time. Absolutely, they have to because the interest rates are going to get cut, so bond rates are going to fall. Anyway, with that, so Danaher, we're not done beating up on Danaher yet. Now, okay, what I want you to notice here, so that was 2022. You notice how choppy the stock is. See, it goes from like 251 to 271. There was a good potential for a play there, and then actually, ooh, that was the one I did. Check this out. Uh, 247. We went all the way to, and I got out. I think I got out here. I got out too soon. That's where I made my $7,000. Look at this one. So October 31st, Halloween, it went up from 247 to 271. So that was 57 60, that was $24. So on a $24 stock price depreciation, let me see, how did that work? I know it was about a $7,000 gain. Well, for me, I think I got out. I think I got out. No, it went up to 274, but I got out around 270. I think because I did it in October. So that was the one that I finally got into. But I'm trying to remember the 7,000 how that worked because it was 10 contracts. I did another video on it. Believe it or not, I actually did another video. And it's
You're
there.
watching Aldi TV.
These ads, or something else. We've got Aldi TV now. Unbelievable. All right. So let's see. 10 contracts. The stock went up, and you see how choppy the stock is. So 246.97 went up to like 271. So that's a $24 gain times 10. That should have been a. Oh, hold on. Times 100. No. Wait a second now. Okay. One option contract controls 100 shares. 10 contract controls 1,000 shares times 24. Dang it. I didn't get all the meat off of that bone. That would have been a $24,000 gain. So I definitely didn't get in here. I got in somewhere between here and here. And I had the trade. I'll link to the video because I went over it was like a 650% gain. But dang, on 10 contracts, that would have been a $24,000 gain. But look here, the same scenario between November 14th and the 28th, it went up another $14. Now watch this. Between January 2nd and January 9th, same scenario again. 10 contracts here, right? There's a $21,000 gain on 10 contracts. And look here, from March 6th to now, I mean, this happens several times in the stock. So you could make a ton of money just following one stock like this. So that's Danaher. That's pretty much all I want to cover on that one. And then I know you keep trying to get me to get back onto the dividends, which I'm kind of talking about dividends here too, but mainly options. Let's see. I'm going to invest in TSLY, and when they pay out the dividends, I'll invest in SVOL. And I think Zim. Oh yeah, Zim. It's another one I was thinking about getting, maybe 10 shares. Zim is too risky. Yeah, but there's a lot to like about it. And look at the dividend it's paying, 100% dividend. Anyway, so the next option strategy here, the UPRO. Some of you I know think this is dumb. In fact, my other options group, they pretty much laughed at me for doing this. But I'll tell you, I've made money on this one because so the idea here, so UPRO is an ETF. It's a triple X, it's a 3X levered ETF. So what we said earlier in the video about the S&P 500, if the S&P 500 averaged 20% a year during the bull market over 12 years, what do you think a fund like UPRO does? 3x on that, that's 60% on average per year. So if you're doing that, what do you think options could do for that? If you're buying options, which remember, all ETFs are optionable. So what do you think call options on the UPRO, right? If you're getting 10 contracts, that's like 30x in your money. It's like cheating in a way when the S&P goes up. Now I've had a couple trades I've taken on this where it's like 1,000 here, 500 there, 500 here. Haven't quite hit the pitch fully out of the park, but I've kind of had some base hits on this one. Now I could go and back test this and I could show where you would have done really well on holding it while the S&P, especially while it recovered during the pandemic. So this one, when the S&P is going to move up, like if we're pretty certain, and the trade I'm going to do in this is another one I need to remember. So much to remember, right? The trade on this one. So let's see the list now. I've got Danaher, I've got possibly Zim shares, oh TSLY, and UPRO. I should do a tracker, a trade tracker. I'm going to do a UPRO leap option. In fact, I'll show on here exactly the one I'm going to do, because the whole idea with leap options, I'm thinking if I go past 2024, past the election, I'm thinking between now and January 2025, I'm thinking the S&P could go up anywhere from 20 to 25%. If that holds true, then that means the UPRO will do what? That's right, 60 to 75%. And if it does that, and you have 10 leap option contracts, you're going to be making some serious money just holding it. So the furthest out leap option we have, January 17th, 2025. So I would probably go for this one. I would go for like let's see, a $50 strike price on this one. And let's see the bid and the ask right now. If you were to get 10 contracts on these, this would cost you like $6,800. So again, a lot of people would laugh at this, but this is like that moment. I don't want to compare myself to what's his name, Michael Burry from The Big Short. Well, this isn't a short, this is a long play. But this is the moment where, the crazy guy could turn out to be the genius, so to speak. So let's see. I might pick something. See, some of these have a huge spread because they're not traded that much. Some of these, like the $65 one, it's probably too cheap and too far out of the money. But who knows? Let's look at what UPRO has done. And I think you all get the general idea of how this works. I want to see because I know this fund is split a couple times. I've been in and out of this fund since 2014, actually. And I don't want the Bollinger Bands. I want the main chart. So let's see. 5 years. How long has UPRO been around? Oh, since 2009. How about that? Look, the perfect play for the bull market. Look at that. I should do another video where I add up the gains. Now, okay, perfect. So that option that I talked about, if we get back to where we were December 2021, that option would then be in the money. So you'd make a killing on that option. So I've got to remember that. That's like my fourth thing on the list to remember here. Now let's do some more comments, and then I'll probably end it there. Because we're into the next day on the East Coast here. Let's see. Do you think buying some shares of UPRO and DHR until market recovers, let's say 2 years, is a good idea? Will it make a lot of dollars? I think so, definitely. I think, like I said, doing leap options would probably be your best bet. That's probably what I would do. And then look into that one. Call. Is that an actual fund name? Let me see. I'll search for it on the phone here. Call. I'm not sure. It's not coming up. I see something called Calon Petroleum Company. So I'm not sure if that's a fund you're telling me to look into or not. I see the USO. Yeah, but what's the ticker for this one? 15. Are you saying 15% return? U.S. banks. Yeah, but give me a ticker. Is this a fund you're talking about, or are you talking about like U.S. banks as a whole? I don't know what you're talking about. Give me something to go on here. You got like 20 seconds. Clock is ticking. Might be listed in TSX. What is that? Oh, you mean the Toronto Stock Exchange? Yeah, but the iPhone should have this. All right, well, I'll Google it then. Let's see. The ETF call. Well, it's not coming up. Let me Google it. Let's see here. Call ETF. Let's see what comes up. Oh, it recommends call ETF TSX. Issuers call. All right, let's pull this up here. Oh, I think I found it. I think I found it. Evolve ETFs. Call ETF. Evolve US banks. And then I got to wait for it to come up. Well, the good news is I have this in Chrome, so I can share my screen. So let's see. Let's see here. It's funny. I actually, I'm just not an Android fan. It drives me nuts on the group text when that one person that has the Android and it's in green, so it's like throws off the whole thread. I don't know. I know it's not the best, but I kind of prefer it. It's just simple. Do I like CLM and CRF? Let me put it this way: I like anything that makes money. Um, CLM, I think I've heard of it. I think I covered it. CRF, I don't think I have. But I tell you what, I'm getting a lot of good ideas from this. Let's see. CRF is called. Oops. CRF. Hold on. Okay. CRF. Ooh, found a new one to cover. 18.82% yield. Um, but this one, well, you got to keep an eye on this one because it's fallen off the cliff in a year. In the last year, it's fallen off like 48%. Hmm. How long is this one? Ooh, 1987. Huh. Been around a while. Cornerstone. This sounds vaguely familiar. CLM, I think I covered. This might be. Oh, Cornerstone. These have both been around since the 80s, haven't they? No, this says 2002, but this one here looks really red flaggish. It went from 147 in 2007 all the way to 769, but it's paying an 18% dividend. So who knows? It may be stable now. Anyway, so let me stop the screen here, and then we'll go over to this one. I think I've run out of tabs here. All right, let's see here. Dang, do all of you have YouTube channels? Because I see like the red icon next to your names. So do all of you have like your own channels? If you do, we can always do collabs on here because I like talking to fellow creators. All right, let's see. US banks enhanced yield. Here it comes. Make sure I'm sharing here. Okay, Evolve US banks enhanced yield fund. So what have we here? Let's see. Looking for better yields with less risk. The opportunity may be one covered call away, pun intended. Through this unique ETF, investors may benefit from the positive fundamentals of the largest US banks with the added value of a covered call strategy applied on up to 33% of the portfolio. Covered call options have the potential to provide extra income and help hedge long stock positions. That's a call worth making. I like all the punny humor here. But what's the dividend? See, you all are rubbing off on me with it. I don't care about anything else. I just want to see the dividend. Oh, here it is. Annualized distribution yield, 13.44%. So the ticker actually is call, but the dang iPhone doesn't come up with it. Unbelievable. I thought the iPhone had everything. Let me see if I type in Evolve US. Oh, here's why. You know what it does? It's not so bad after all. Anytime it's on the Toronto Exchange, it comes up with whatever the fund is, .to. So it's call.to, if that makes sense. 13.45%. I will cover this one. I will add this one. Good. I've got like 4 new ones to add to the list now. Awesome. A lot of stuff to remember here. I got like 4 new ones to add to the list, 4 trades to make. I know, crazy, right? Let's see here. You sound like my podcast co-host about going outside of the U.S. That's what he says all the time too. I know. I'm just so like focused on American stocks for whatever reason. Do I? Oh, here comes a good question. Do I plan to retire in the U.S. or another country? I'm in New York. Definitely leaving this expensive state. Yeah, you probably should have left there a long time ago. What are you still doing there? I mean, a lot of people from New York actually come down to Florida, and but they have family, they have ties up there still, so they go back up there. So I get that. But as far as being a permanent resident, I would have said you should have left that state a long time ago, especially if you're anywhere near New York City. But anyway, um, yeah, good question. I would have to say to be decided. I mean, I'm in Florida right now, really great state, um, cheap cost of living, relatively speaking. But I'm not opposed to other countries. Like there's some countries, like I know Thailand's very popular, uh, cheaper living. Your money goes a lot further. I've heard a lot of there's a lot of positives possibly about leaving the U.S. Canada's full, impossible. The Canada can't be full. Way too much land up there, and it's too cold for a lot of people. So I can't see Canada being full, but I do think Canada's more expensive than the United States. Um, but yeah, and I don't know though. I'd have to decide. I've got to retire first. I would say I'll probably retire in the U.S. because I have to retire first to decide where I'm going to go. Ideally, what I'd like to do, I'd like to have multiple like timeshare type arrangements where I could just go from here to here to here and never stay in one place all year. That would be the ideal thing. Like have, go over here for a month, go over here for a month, see these people over here, see these people over here, and not be stuck in one place. That would be ideal. And I thought about like a year ago, because I wanted out of the job I was in so bad because they were really forcing the in office policy. So if you see any headlines about companies doing that, you'll probably figure out where I worked before. But yeah, they're just completely insane about it. So I got out of there. But before then, like I was really desperate to get out of there. And I was to the point, I was even thinking about doing like the RV thing. Like I was thinking about selling the house and doing the RV thing. But then gas prices in this country just went insane through the roof. And so I said, you know what, that's not a great idea. Plus, other states are more expensive than here. So kind of gave up on that pipe dream real quick. Didn't last long. But yeah, I mean, like I say, I'm not opposed to those kind of ideas. And I thought about because I've actually seen many other channels on this space, especially in the finance space on YouTube, uh, where they do the whole like off the grid lifestyle. So they talk about finance, but they're like making trades from the back of their truck. They're living somewhere, they're in an RV park or something. So I did briefly think about that, but I just didn't find it to be practical because I think it was crazy. Like I started figuring out costs and stuff, and electricity was going to be like $1 an hour or $1 for 30 minutes or something like that. So when you start spending like $24 a day on electricity, I mean, that starts to add up quick. So you think you're saving money over here, but you're spending it over here. I mean, you think, well, $1 an hour, that's not too bad. But I mean, that's like you're talking about a $750 electric bill, plus your gas, plus all this other stuff. So you may end up saving dollars over here to spend more dollars over here. But anyway, well, that's pretty much all I had today. Really good discussion. I'm glad I got a lot of participation here for an options video and got new funds to cover. And just to recap again, remind me again, the trades are TSLY, got to move money around, buy TSLY, the UPRO, leap option, January 17th. And then what was the other two? Oh, possibly some Zim. Oh, and Danaher, the most important of all. Anyway, I'm going to end it there. Thank you all for watching. Take care and like, comment, and subscribe. Have a good night.